following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi. Whoa, got a lot going on here today. Had a little bit of a market pullback yesterday. Let's take a look at the S&Ps. All right, let's restarting the video here. Here we go. Hope we're okay now. Got a little technical message from TFNN. Okay, let's talk about the S&Ps a little bit. I had a little bit of a pullback. When I say a little bit of a pullback, that was 30 on the S&Ps yesterday at one point. So here's the daily situation. As we pull this, okay, let me cut off the video here, guys. Let me see if that helps. All right, here we go. Nobody wants to see me anyway. It's not the first time I've heard that, actually. So here we go. It's looking at the S&Ps. Still above profiles here, showing it in the room here, showing it in the den. Again, haven't had any new profiles appear, no new supply appearing up top. But yesterday, as we drill down into the 240s, we're going to see something here kind of cool. Because yesterday we had talked about, you know, the uncle point above, we were looking at 21, 21, 21, 22. That was something we were focused on. This is the time we were on yesterday, right around in there. And we were kind of coming up into those inflection points. And we had talked about, you know, not longs and trying to find ways to maybe nibble on the short side. And we talked about, you know, a couple of places we had tried to pick a battle, didn't work out. This one was a little nerve-wracking to me right here back in on the 20th or around the 20th. And as we tried this again with the breakdown, we talked about placing stops above 21, 21, 21, 22 yesterday and trying to let this thing do what it might do. And, you know, where do you take this off? This point at 21.10, 21.11 here on the short side. Again, playing a little bit of a dangerous game on the short side, but you know, why are we looking at this way? Because as we go into the scanner and pop the scanner now, look at this. This is something. Again, I'm going to just step back and show you the broader view here really quick. The weekly. This is June contract here. We'll spread this out a little bit. I have a lot of data on June. Above profiles. You might be saying, Logan, well, that means it's okay to be long, not okay to be short. All right. On the long term, that's been a really good MO to use, and we've talked about trading long-term inflection points based on whether the breadth's positive or negative. That breadth's still positive in the long term, but the intermediate has really been, and you know, if you've been watching this show, you know you've been seeing me and hearing me talk about passing on some long opportunities and trying to take advantage of short opportunities based on that breadth. Even though we are not near inflection points and we're above profiles, just like on the weekly, we use this barometer, if you will, these breadth situations to kind of find ways, especially if they're not in concert with each other, to try to take advantage of these situations. So, okay. So as we look at this, and as we looked at the breadth rolling over and looking relatively weak, and on the close, in my opinion, very weak on the intermediate, we were drilling down into lower term time frames to try to find something to hang on to. And what we talked about yesterday, trying to find a leverage point to hang on to, was again coming back full circle to what we initially started out at with 21, 21, 21, 22. Now, they don't always work out like that. We got stopped out a couple of times before, but the theme of a lot of the things that we do, there's two main things. The first one is on one side of the marketplace, and you try to use all the tools and a couple of other things. And we had our navigator cross over to zero at the same point yesterday, while this was happening, which is kind of nice. Try to line up some things in your favor. Try to put probabilities in your favor. Try to use that breadth indicator as a guidance tool to what side of the marketplace you might want to try to block out. In this case, we're trying to block out the long side. And also use that same old adage that we always talk about is lose a little, lose a little, lose a little, make a lot. This was the kind of the make a lot part of that equation. So again, you can't say enough about some of the breadth situations that are on the scanner, because they provide really what's going on with the internals in a non-weighted fashion. And that gives you an idea. If you weight things and you try to just pattern it right after the weightings, and you're going to have something really that turns out to be very similar to the index itself. What we're showing you is a possible divergence tool, if you will, that you can pair against that index price action, and you can do that on a number of different global indices. I'm pulling this up, and we've literally got this now in Tom and Tommy's hands. User password identification. Did some cosmetics here. I hope you guys like it. This thing is flat out awesome, in my opinion. Help files, Taz says situations, breadth paragraphs, and by the way, some very cool filtering features here. I think we've got Eric that's called in. Eric, are you on with us this morning?
Good morning, John.
Hey, buddy. How are you?
I'm good. I'm doing fine. Everything's under control up here in New York City this morning so far. And I always knew soccer was going to be a big sport, And if you see the headlines, I mean, it is the most crooked. It's crazy. I love it. I mean, it's just human nature, John, is evil. You know that? It really is. I'm sorry.
I won't necessarily disagree with that.
So, you've got a good new little bit of adjustments you've made here that are phenomenally. I mean, you know what gets me? I read Stettlemeyer's book again, the guy that you've worked so closely.
Let's talk about that, because that's something dear to my heart. You're a very well-read individual on many levels, but you have really kind of done your homework and done some research on the market profile, and then the guy who kind of organized all that, Pete Stottlemyer, which I spent some time with in the Board of Trade when I was there. Actually, was in the same office as him quite often. What have you been digging into with that? You're piquing my interest already.
Try to keep it as simple as I can. You know me, I can't get too complicated because I lose myself. I start wandering around. But most trading methods and books and services cover mechanical methods and systems, and they leave these reader and person studying them with sort of a kind of limited, not very flexible base from which to develop. What Stottlemyer did, coming out of the farm country in California, going to Chicago, losing his shirt and cotton and trying to figure out what the bottom line was, he realized the price and value and real point of interest in the market. And he also started to really understand the natural way of trading, which is what everything the scanner has. It's all natural. We're talking volume, we're talking support, we're talking resistance, we're talking relative strength, we're talking MACD, we're talking all the things that have been out there. However, you're tying them together in a format based on his thinking, which to me was that I want to be able to recognize opportunities early, and I want to recognize the unexpected early. And that is where the scanner comes in. And if you learn to read it, it's a language. It's a new language. And it's something that I think you've taken his work in distributions and point of center prices and unfair highs, unfair lows, profiles, all of the other things that he did, really revolutionizing the commodity distribution statistics. But you've taken all of that and put it into a natural trading format. Takes a little bit of effort on the part of the person studying this, because they have to understand the history it's coming from. It's coming from somebody who really understood why people make money and why people don't. And it's not just the mechanical books out there. It has to do with a certain natural flow of information that you're able to see on one screen in front of you. You get up in the morning, you put the scanner on, I'm telling you, you're the smartest guy in Goldman Sachs after 15 minutes, okay? You really are, you know? And I talk to senior executives, Wall Street type people, and try to, you know, get them interested, because they love nothing more than to pass along some information to the people that work for them. They live to be able to say, here's something new I want you to look at, or go to their head trader or their prop traders or some of their other people that are doing some of their research for them, and say, start scanning this, get some idea of the sectors, get some idea of what the feel for the breadth of the market is, get some idea on what the natural flow of the real price and how the real price, the point of center price, and how around that price are various prices that flow and pull back and forth with the gravitational natural pull. And you've been able to depict that in the scanner. Stelmeyer was a genius. I know you knew him. What kind of guy was he? Was he sort of a quiet, sit by himself sort of person, or was he a very aggressive type personality?
Tell you what, he's a big hunter. I mean, I was like amazed. First, I went to his office. There's like a, you know, one of those panoramic photos in the frame on the wall, and as far as you could see in both directions, it was ducks hanging on a string, and you know, deer and all that kind of stuff. He's a big gamesman or whatever you want to call it, or something like that. But you know, drilling down into, you know, what kind of person is he? Very hard to figure out sometimes, and you know, I kind of go back to the one time I asked him, you know, because I think what we've done, Eric, what you can really appreciate, maybe other folks can, is we kind of turned that market profile subjective view into a kind of an objective view, where it's a lot more rules based, and that helps, you know, idiots like me try to figure the markets out a little bit easier when we can try to have a rules-based environment to operate within. So we kind of, you know, just really boxed it up a little nicer and eliminated a lot of the subjectivity. I mean, I used to want to kill him. I'd come to him and say, "Hey, Pete, why? You know, what do you do in this situation?" And he'd look at me and say, "That's an endeavor to persevere." Like I was, you know, the Indian of the Clint Eastwood movie or something. You know? So I tell you what, I hear the music. We're gonna be right back. Can you hang around with us, Eric?
Sure, of course.
Great.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've still got Eric Courtney on with us. Eric, you still there?
Yeah, I am still. I was just thinking about some of the things you said about him being a hunter. You know, a hunter likes to hunt. They have two things in common, most hunters. They have patience and they know when to execute. They know when to shoot. And it seems it's very logical that he is like that, because what he's basically put together here is when to exit and when to enter a trade, if you wanted to get down to the bottom of this. The thing that I find that I tell people that are, look, you get to know the natural market and you get a feel for it. You get to see opportunities early. You recognize the factors creating the unexpected. And very importantly, for larger, you know, hedge funds and even anyone, you have a paper trail. You have a paper trail, always. And that is very hard to find anymore. Most people don't have paper trails. They go into their board meetings and say, well, how come you got out of the autos? Well, you know, let me go through some papers here and see what research report we had from Marianne, you know, on the GM. I mean, this is right in front of you. I mean, you've condensed it, you've perfected it. And your entry-exit situations lately, John, I mean, going over a couple of them, like, you know, tell me, the euro, go over a few of these things that we've been able to, you know, really focus on.
Well, somebody was saying in the den earlier, I mean, thanks for patting me on the back, but there's some people on our team here that really heavily contribute, as you know, Eddie and Ben and a couple others. But Steve Dahl, we've got, in my opinion, a real simplistic way of looking at things. And you know, you go full circle on this, Eric. I know you've completely been around the block just as farther than I have. But when you kind of really have seen it all, you really want to go back to something simple that you can, really rely on. And this was really the only thing that I personally could rely on, or Eddie could rely on, was being able to kind of set up and show a slice of the marketplace. Try to, again, box it up a little more objectively than Stottlemyre did, and be able to block out one side of the marketplace. I mean, that's somebody was saying in the den earlier. I was just saying, look, it's the only way that I would ever sit down in front of a terminal now is to have something that kind of allows me to eliminate one side. So, like, I'm looking at the end right now. I mean, this was
Critical.
the close above profiles. You got to be a full-blown moron if you take that attitude that it's okay to be long, not okay to be short, and try to look for support areas. Now, there's some other mitigating factors sometimes, like on the indices, like the breadth, and some breakage are okay sometimes for some probabilities that come into play. As you've seen this movie so many times, that those are the things to possibly maybe mitigate the rules with here or there. But when you have something like this on the end, we have been, just beating the desk about try to find support, try to find breakouts. And, this is, again, something else we looked at with the euro. I'm pulling up the euro. And we talked yesterday. It's like, is this trade over? Is it time, let a fine wine breathe? Is it time to start, farting around with taking off some weight on this trade? Really didn't give any reasons because no new information had appeared. And, there's no, there, I'm a big fan of people that use some target rich type indicators like the Fibonacci series and things like that. But these profiles kind of let me regulate it in a way that it just makes sense to me. And it also allows me to understand when new supply or demand is coming online. And then I need to say, okay, or anybody that looks at our information will kind of, be able to assess things as they come online, and make some decisions for themselves, and let that kind of trailing stop type profile way of looking at things, help them decide whether it's time to take something off the table or time to get out of something that's ugly.
To recognize the accumulation and distribution is one of the things Stottlemyre spent a tremendous amount of time on. Most people don't recognize when the distribution is coming. They don't recognize when accumulation is coming. Nobody believes this market. I believe it because the Fed has pumped the market. But while you're on Europe, I want to chat about that a little bit for a second, too, if you don't mind.
Let's do that when we come back here. We got to get a break again. We're going to take a look at the U.S. dollar, too, when we come back, because that was a very similar situation of troops on the border. They crossed it. Okay to be long again, not okay to be short. So we'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Eric, you still with us?
Yeah, of course, John. Right here, ready to go.
Good.
We're going to talk about Europe for a second. Did you want to chat about that, and then you can tie in the dollar and how that affects everything that's going on here, earnings, et cetera, et cetera? You know,
I'd love to. I want to first bring out something. I mean, we're just to kind of cover a couple of bases. The currencies are obviously in play. We looked at the S&Ps, a little bit of that sell-off yesterday. I'm in Asia. These things, Joey was on here not too long ago, last month maybe, and we were talking about the Shanghai and the gathering motion of this thing being on the launching pad again. He was so right. But I wanted to bring out, that block out one side of the marketplace to Shanghai, and I hate those guys who way after the fact say, "Oh, see, you should have done this here, you should have done that there, blah blah blah." I'm just strictly showing you how profiles would have kept you out of getting your head bashed in on the short side here. For a while, and right now there is still, and you can be a cowboy and you can make some high risk trades on the short side on something like this, and make some points and laugh and go drink a liquor bowl and celebrate or whatever. But it's something that is a real dangerous game, and what these profiles do is it kind of still again blocks out. Is it okay to be long, not okay to be short, vice versa? And that keeps me out of a ton of trouble when I'm trading. I just want to point that out. That's the Shanghai, the Nikkei situation. This time, a lot of people don't celebrate drinking Slitsmart liquor bull. Eric, sorry about that. Here we go. Here's the Nikkei. We're okay to be long, not okay to be short, about 20 grand. So again, trying to make sense, eliminate one side of the marketplace, keep yourself out of trouble, and basically use the inflection points to orient stops around and do some profit taking. So, Eric, we were talking a little bit about Europe. We're going to kind of get into that a little bit today.
Yeah.
The euro is kind of coming back down to earth here after that little bit of a short squeeze, I would call it.
Right.
They've got some issues, without question. We were banging around so many topics on Europe earlier. Where was the middle ground on what we were talking about? Because it's just an endless conversation that you and I have about Europe usually.
I think the European situation, to me, I finally came to some ideas of talking to a lot of people, and the one thing about Europe, that's where the Protestant work ethic started. That's where the basic foundation of that came over to this country, that has been able to greatly grow this country, that ethic, that work ethic. Well, what's happened in Europe, because they've been through so many different sorts of economic, as we have, from the Great Moderation to efficient markets to stochastics to trickle down to privatization. The big thing now is austerity, which basically makes all people, angry over there. What I'm seeing in Europe are two things. One, there's a sort of a decline in consumerism, which is critical to the growth of an economy. The QE2 efforts would hopefully help that. Another thing, and this may sound silly, but only 2% of the German population attend religious services anymore. Only 2%. Now, what does that mean? Well, it does. We're not talking religion here. I'm talking about a whole change of philosophy. There is a change of philosophy in Europe. They've all been given a task of accountability. Now, accountability is based on accounting. Accounting started with the monk in Germany back 1,000 years ago, writing the first book on accounting. All of the accounting had been over the history of time. Here's how much money I have. Here's how much I'm spending. They never did the double entry accounting, where here's what I spent it on, and this is what the value of what I spent it on is worth now. And at the bottom, you balance the book, right? They never balanced the book. Louis XIV didn't balance the book. Louis XVI lost his head because he didn't balance the books. So much accounting. And in this country, all the big accounting firms, John, they're a joke. All right, they've all got themselves in trouble. Accountability with Lehman and the lying and the accounting, good accounting principles are critical. Europe has a problem with accountability. Merkel and the Germans, they know accountability and they know that, but the other countries just are starting to seem to me to be just sort of like, loose out there. They're moving in their directions. They're lying. They're coming up. Greece, that's one of the unexpecteds. It's not unexpected. If Greece leaves, Greece leaves. It's not going to break up Europe. But the fact that Europe doesn't seem to have the consumerism, doesn't seem to have that internal Protestant ethic, that work ethic. And then now here in this country, let me give you a change. Route 66 is no longer a route of a bunch of fast food restaurants. Route 66 is a route of a bunch of churches, evangelical, Baptists. You have you have one church for every 400 people along that route going out there in the middle of nowhere. And the reason for that is the people in this country have come back more towards a work ethic, a responsibility. And I think you're going to see that really. That's one of the things that's helping us. And I think that's helping the economy. Now, it sounds crazy, I guess, and I might be out of my mind because I'll give you an example. Yesterday, I took a walk around an area in Brooklyn called Eastern Parkway, which is where one of the famous people of the world in Judaism, the Rebbe. I'm an Irish Catholic, but I'm studying Judaism because, you know, one of the things I missed in my education, I missed the way they think. I missed why do they think differently. They have tremendous success, tremendous staying power. They've been through it all. And I'm friendly with several yeshiva people over there. And I go over there and I have a cigar and we sit and we talk. And they like me. I mean, so you know what I'm getting from them? I'm getting from them a very simple attitude about what you do to live your life. And what they do is they do more. And then when they've done more, they do more. Then when they've done more, they do much more. They never, ever stop. Just watching them walk, they walk with a purpose.
Right.
That's the difference. People in Europe are not walking with the purpose anymore. And I think
that's a great kind of come full circle on that topic. Yeah, it's a changed place. I mean, I've been in Europe recently. Eddie's living in Europe, as you know. He was just here a couple of weeks last month, or this month actually.
Yeah,
getting a little confused here. And you know, he comments about the attitude. Also, there's a lot of, you know, the whole population base is kind of changing there too. It's, you know, you look at some of the stuff going on in France, and you know, the Sharia court type situations. I mean, like, how in the world did they even let that road get started? I mean, like, it's unbelievable. But you know, it's,
I know why. Money. They brought money, and they do it here in Brooklyn. They come over to Brooklyn. What do you think they do? They rent spaces. They have money. They do come. The Egyptians, the Yemen, they come with cash. That's how they get in.
Well, I tell you what. That's a little insight into Europe, and it pairs a little bit down into possibly on the long-term basis why the euro is caved in a little bit here. But the technicals, again, on the I'm looking at the chart right now, the technicals on the euro, and I've been fundamentally bearish on this, but technically it's almost inarguable of what's going on. We've kind of those areas, and you know, it's kind of been the gift that keeps on giving again. The cool thing is as we looked at the euro and as we looked at the let me see if we can get our chart working here. Al, are we still okay on our chart? I'm kind of locked up here. Okay. When we started breaking above the 111 area, talking about eliminating one side of the marketplace, you know, that's where it was really foolish to hang on to the shorts, to pick the battle at the 111 area, the dailies and the weeklies. We started having a change in tone on the dailies, getting above zero on our navigator, and also, you know, breaking some profile highs. And we had to just wait patiently. No matter how bearish we were fundamentally, it wasn't technically, and this kind of goes back to some of the things that Eric is saying that I truly, deeply feel very, you know, on the same side of the fence with Eric on. It wasn't technically the right area to pick the battle to stay in the short trade. So we had to wait for some new, you know, opportunities to basically happen. So that's kind of the way that bounces, and I'm trying to get my charts to adjust here. There we go. I tell you what, Eric, we're gonna, before we got about 4 minutes left before this segment's over. What we're going to do is we're going to go into, now we talk a lot about rates, you and I, and you're kind of on the side of the fence of, you know, rates are going to edge up. They're, you know, it's going to be good for the economy overall. It might be, you know, kind of a short-term depression that everybody gets into because they can't borrow money at 0%. They're going to have to borrow it at 1% or whatever that's going to end up being. Technically, the 10-year to me really hasn't broken down, you know, below weekly unfair lows, that 127.11 kind of DMZ that we've been talking about. Now we kind of bounced off of it again. That's going to be the real damaging close below that area that's going to start converting me finally into the camp of maybe some rates, some lower rates or some higher rates are here to stay, and we better watch out because they could go higher. But right now, technically, you know, we're hanging in there. The 10 years technically still somewhat okay here. What's your feeling on where rates could end up in the next, let's just say 12 months? I mean, we're at what, 2.3 on the 10-year, somewhere in there, 2.5, bouncing around. Where do you think
I'm looking for some unexpected things. We had one last week with the housing numbers that came through and all the rates jumped. You see, I'm looking for several catalysts like that to change the perception, so that the business people and the people that are in power start to see the acceptance of higher rates as a good thing. They've kept them low because they felt they've had to keep them low to get the economy from going into, total disarray, and they did that here in this country. We haven't seen that happen quite as well in Europe yet, but I think it will happen. You're going to see those housing type numbers start to show, and what's going to happen is you're going to see a lot of people need a vacuum cleaner. A lot of people need a car. A lot of people need to get back into a house. A lot of people are working. I look at minorities in the way they work 2 jobs, and in the way they buy some house, and the way they buy the car. I look at people across the Midwest, etc., that are much more conservative, but I still know that there's a pent-up demand. The banks haven't done us any favors. They've pocketed the money. They talk about accounting and accountability. I will tell you, the banks, half of them belong in jail. Now, the net of this all is going to be a demand for capital. The demand for capital to buy goods, to continue the consumer, is going to raise rates. I would expect to see 50 basis points higher in a year from now for sure. Absolutely. Right. And I think the mathematical finance will then allow companies. Do you know that CapEx is starting to pick up? Cap expenditures have not picked up. They've been putting the money back in their pocket, buying their stock, paying their dividends. No plants are being built, no real hiring of quality people and training. All of a sudden, CapEx is starting to pick up in certain sectors of the country, and it's going to continue. And now that they're going to start spending some of these hundreds and hundreds of billions of dollars tucked away in the bank, that's going to help rates. So rates, I feel, are headed higher. 0.5 point is minimum, I believe, within 12 months. You may even see 3. And the way the yield curve is, what's going to be interesting is going to be when some of the, holdings of the Fed, that it's running at a 77 times leverage, which is outrageous, are going to have to be sold. And so, that's going to be another factor that's a mechanical factor in the markets that's going to help rates to the upside. And when rates go to the upside, that's good. That's a good return.
It's been a joy to have you on the show today. Thanks for all your comments, and I feel smarter every time I listen to you. So
yeah, I feel smarter every time I watch what you do. Let me tell you something. You've got this thing down to where I'm the hunter watching the scanner for my point of entry.
We'll pick it back up a little bit later, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, back to this. I had promised someone, and I was very happy to do so, to ship feeder cattle, the August contract, I believe this is. And here's the situation on the daily. We've kind of been churning and using this 215.87 area for feed cattle. And, this is kind of an old school, not a lot of people are trading this, but my charts are stuck today. So we've got 215.87 sitting as support. Not a lot of conflicting information down here to think otherwise, that we may move a little higher. The targets, by the way, we've got enough information here to look at these long-term profiles. 221.45. So the real solid breakout on this is going to be 221.45 or directly above there. But right now, I think you've got that kind of consolidation. That's at least going to be targets. I haven't been watching feeder cattle from a fundamental side, so I can't speak to too much what's going on, this area. They just asked me to look at it. So we're going to meet some targets above 221.5, that general area, and possibly even higher. It's relatively bullish. You're still looking at okay there. So, all right. So, turn camera off. Okay, we're going to turn the camera off. We're going to see if we can be okay here. All right. So, again, we're looking at having a tough time here at the end of the show with the technicals here. All right. We're going to take a look at the Aussie dollar quick. This is something I wanted to bring out before. We were hoping, very much so, this is our daily situation. This is our weekly, excuse me. We're hoping to get back down below 79 to really get back in the water on the short side. Now, we had to close below. We kind of came back and retested. Now we're trading in the 77 area. So we've got about 200 pips in this trade right now. Targets below are ultimately going to be that 76 area. We talked about that the other day. And the reason we were looking at that 79 area as a big border is because we had our weekly unfair highs and daily unfair lows. There's those daily unfair lows. Close below, go back and retest the head lower. And I still feel 76 is going to be on the table here. 76 even for targets on the Aussie dollar. And I don't see a lot of things in the way here right now. So, again, it might be something that just continues to drift down. This particular country wants its currency devalued, and you've also got some other headwinds ahead of this. And that little short squeeze up to 81.5 was just a stop out and then a gift to kind of get back into the short trade on this Aussie dollar. Let's take a look at the U.S. dollar. Now, this is one that, it was kind of something that I wasn't very bearish on, even when we got below 95.5. We wanted to wait on the long side until we breached that border. Weekly unfair lows 95.5, and then on the get this to move here. On the dailies, we had that 95.34, so 95.5, 95.34 daily unfair highs, and see how we broke stride there, consolidated and moved higher. Where's the end on the dollar trade on the north side? 240s, 98.12 is something I'm looking at here. We're about another 50 cents from there, but the 240s, you got to be looking to really get out of the trade below 97 on a stop out right now. Whew. Guys, you've been great. Steve Rhodes is next. Hang around.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.